As always, please keep in mind that I am not a financial advisor. The content on this channel and on my website is intended for educational and entertainment purposes only. Hey guys, and welcome back to the channel. I recently closed two positions, one on the 11th of November and one the week before. And the one I closed yesterday was Assenderp Energy, which was a closing that was a long time coming. And in this video I will explain to you why I closed it in particular. And the other position that I closed was Assenderp, and that one came as a surprise to me, but it felt like the right thing to do. Let's start with Assenderp. So, Assenderp had very tragic news last week. The founder and CEO, Andreas Schneider Nerieder, suddenly passed away. It's kind of ridiculous to actually read a newsletter like that when you're invested in a company. It feels very odd and very inconsiderate to see something like this and then think about the financial decision that you're going to make. So I was questioning whether or not I was going to make a video about this, but since I closed the position, I thought it would be good to share with you my learning curve on this one, and in particular why I closed it. Well, it actually has one particular reason, and that is that the founder had a significant insider ownership. I have no idea what's going to happen to that insider ownership, but I now know from my financial perspective that there is no longer somebody working within the company that has a significant insider ownership, and that just brings a lot of uncertainty with it. And the company had recently, I think it was a few months ago, decided to let go of the other CEO or something like a CEO that had a significant ownership as well. So there, with this news comes a lot of uncertainty, and my main thesis, which was that the vision that this founder had, I believe that to be a very strong vision, and I saw potential in this company to make a significant turnaround and to make this into a 10, 20, 30 bagger. But obviously now that that has just turned into a unreal uncertainty, and therefore I decided to not take a loss, take a slight profit, but just close the position. So I thought about it, and I just thought, okay, well, my initial investment thesis no longer holds up, and that is why I'm closing that position. If I will keep an eye on this company though, so if a new CEO comes and he has a similar vision and similar insider ownership, I will not hesitate to invest in this company again. But for now, I'm just going to put it on a back seat. The other company I closed is Assenderp Energy, which from my previous video you now know that this was my least conviction stock. I believe this company to be undervalued based on the current environment and negative sentiment that we're seeing. But the past few days, as you can see here, we've seen a significant change in that. And the company went, basically about 100%, a little bit less than that, I'd say about 80% up over the course of a week. And I decided to look at the company again and see how undervalued it still was, and if this would be a good moment to close my position. And I looked at the financial statements of the company, and I noticed that they have been selling a building. And in my opinion, selling real estate right now is probably not a good idea, because it's going to be probably trading at a discount to its value. But they did it anyway because they needed the money. That did make the balance sheet a lot healthier. But regardless, this could very much mean that the equity, the shareholder equity to be precise, could change significantly. So I took another look at that. And if we look at this area, we see that last year was about 400 million equity, and right now it's only 128 million equity left. And I checked the the what's it called, the market capitalization of this company, and it is trading right now at 93 million. So it's not that cheap in the price to book value range anymore. It's trading at like a 30% discount. So I had to look at the rest of the business to see, okay, is this company still generating a significant amount of money, or is this potentially all the money that I'm going to get? I specifically looked at the cash from operating activities, so the operational cash flow, which was 27 million in last quarter, and they had a capital expenditures of 8 million. So that leaves with a free cash flow of about 19 million. Doing the free cash flow or discounted cash flow method and calculating the value of this would actually mean that it has significantly, or I would say significant upside, because yeah, it's trading at a below price to book value and is generating about 18-19 million in free cash flow per year. So you might want to think about, okay, this could increase over time. However, I realized that this looked positive right now, but the past 3-4 years were actually quite negative and significantly negative. So to me, there was too much uncertainty in the future cash flows in that regard. So looking at price to book value, I decided to just close this position and take the loss of about 30%, I believe, which is quite significant, don't get me wrong, but I had a very low stake in this company, so that made it a little bit easier for me to close the position. So from Sandbridge, obviously I have a few takeaways, because I invested in this company a while back, and the first thing that I learned from it is that don't diversify for the sake of diversifying. I've mentioned this before. I think this is a very bad way of looking at diversifying. I don't think you are protecting your downside per se if you do it, if you instantly diversify significantly. And that's the mistake I made with this company. So I was investing heavily into diversified gas and oil, which you probably all know about if you follow my channel. And yeah, back then I was like, okay, I think this company is a pretty decent one to diversify into, so that I don't expose all my money into one company in the same sector. Obviously, this was way before my my entire vision on DGOC and when I started to increase my position in DGOC. But yeah, this is the lesson learned from it. Like, it, to me personally, and that's what I've experienced in the downturn as well this year, is that I don't mind that if a company sees a very volatile period, as long as I understand the underlying business very well. And with DGOC, I think that I understand it very well, and that gives me a lot of comfort. With this company in particular, I didn't understand it as well. I was unable to rely on the metrics that I usually rely on. And yeah, that actually created for me more uncertainty, even though I was diversified twice as much than I am now after I sold it. Second is if I'm gonna buy a company at a price to book value discount, I think I should question that discount more. As I showed before, we've seen now a valuation drop from like 400 million to 130 million. Obviously, a lot is related to the crisis we see in 2020. But regardless, when I look at the balance sheet, I should focus more, okay, what are the actual assets that the company owns? Because it doesn't necessarily mean that they are going to sell it at that price it is worth, or that it is noted on the balance sheet. And I was actually looking at a different company recently, which was a Core Energy, which is a midstream asset company, and that had like this, I think the most insane decrease in value for a midstream asset company, and that is because they had a significant write-off on their balance sheet, and the balance sheet write-off was about 80%, and the stock decreased 90%. Since last year or something. It was really insane to see a company decrease like that. But yeah, it happens, stuff like that, and I think yeah, I would be wiser if I question the price to book value discounts more often. And thirdly is I should avoid eagerness to invest. So in this particular company, I thought it was undervalued, and that's why I started investing in it. But looking back, I didn't know enough to invest in this company. So overall, I think I should not be too eager to invest in a company and just take it slow. Like I have a decent amount of money already in a portfolio, and I think yeah, investing today or 2 weeks from now shouldn't make that much of a difference on in the long run. So yeah, I just think that that's a decent takeaway as well. And yeah, to round this video up, I think I should say is that this is now my new portfolio. So instead of 12 holdings, I have 10 holdings. And something you might notice is that, yeah, International Airlines, John Menzies, Capital and Counties, they've all increased in position, and DGOC has been decreasing relatively. Why? Because DGOC has been steady this week. And yeah, these, I guess the top 5 companies have seen a significant run up. Besides this one, I guess, but the rest have seen significant run-ups from like 40 to 60%, and yeah, that changes your portfolio a lot from a net worth or from a value perspective. But yeah, looking at this portfolio, like I'm taking my mistakes out, my previous mistakes, and it's slowly becoming more of a portfolio that gives me more confidence. And yeah, that is kind of a relief. I think cleaning up your previous mistakes by just taking a loss or taking a profit can actually be very good for your portfolio and gives you potentially a better outlook for the upcoming few years. And I think that's what has been happening now. The one question mark that I still have in my portfolio is American Airlines. Mainly because I am not that convinced by the financial part of it. I do believe that this company is still undervalued. I'm just not that convinced as with International Airlines Group, for example. So that one is a bit questionable to me. So if I'm talking about my least conviction stock, I think in my portfolio right now that would be American Airlines Group. Most conviction still remains DGOC, and yeah, I think the rest is looking all pretty interesting. So that's it for today. If you missed my previous video on my portfolio update, I will leave a link in the bottom left corner right now. And yeah, let me know what you think of this video down in the comments below, and if you agree with my learning curve, and yeah, potentially what are your least conviction stocks. I'm very curious about that as well. Thank you guys for watching, and see you guys tomorrow.